Welcome to another session of the International Tax Post video interviews. Our guest today is Nishith Desai, one of the pioneers of international tax law in India. He has a very successful law firm. He's very well known in international tax circles. He writes frequently for well-known international tax publications, as do many of his associates. We're very lucky to get some of his time. I know you've got a conference going on with the entrepreneurs who are representing India's outward expansion into the global economy. So let's turn to some of the hot topics. I know there are quite a few. India has been making waves, I think, with its show cause notices to Vodafone and others for transfers of shares outside of India in non-Indian companies. And a number of other issues. There's been criticism or commentary about how it's hard to get resolution of issues that are uncertain here. From a big picture perspective first, what's your view on whether this is true, first of all? Is India problematic for multinationals from a tax perspective? And if so, how might they best approach trying to affect that?
Absolutely. I think today tax has become the biggest problem for multinational companies to set up business, to operate business, and sometimes to exit. What has happened is that for about 50-60 years, we are somewhat frozen. And now suddenly India is becoming global. As a result, there is so much cross-border activities which never happen. And there is not enough jurisprudence, there is not enough precedent in the context of the globalized world. Given that fact, the different segments of society, the taxpayers, tax department, judiciary, politicians, everybody is thinking and a lot of people are not clear as to what's the right approach. Taxpayers find there are a number of loopholes in the tax laws, so they try to exploit everything that is possible in the world, because today, like, we do not have tax consolidation in India. Okay, we have corporate consolidation, but we don't have tax consolidation. So if you set up a company outside India, you can book your profit outside, keep them outside, and just until such time you bring that money back to India, there is no tax. Okay, we don't have CFC, we don't have PFIC, we don't have stuff like that. So a taxpayer is finding those kind of situations. In tax department is trying to find every problem that could be created, because the current law does not necessarily address all the issues. So sometimes the innocent people are trapped, long-standing practices are disturbed, and also tax department is becoming more sophisticated and imaginative, okay, as it normally should be. The issue is that particularly at lower level, understanding of international tax is very poor. Second, the approach is extremely biased and adversarial. So every small thing you pick up, and in Indian context, $100,000, $500,000, $1 million is a huge, in terms of rupees, revenue.
Right. So
tax department is going after every multinational, because they think that if you trouble them a little bit, they will always pay up something. If the tax payable is 10 rupees and you say you have to pay 100, so you start fighting out, and ultimately you extract 40, 50, but it is 4 times the legitimate demand for tax. So foreign companies have to shell out significant amount of money because of the high-pitched assessments, and then they have to go and appeal. Fortunately, the best thing about India is there is rule of law. So, from income tax officers, appeals go to the commissioners of income tax, commissioners of income tax appeals. Now that is departmental appeal. I am told about 80 or 90% of appeals again go against the taxpayer.
Right.
As soon as you go to the next level, to the income tax appellate tribunal, which is more open court, and cases are argued, and almost 90% of the appeals are overturned. that is telling story, because you have almost 90% of the cases turned over. That means what's being done at the lower level. So anyway, and the same thing continues when from tribunal appeals go to High Court or the Supreme Court. About 90% go in favor of taxpayer.
And does every dispute go through all those levels?
If it is too small an amount, perhaps sometimes not, or issue is not that. But by and large, it is a standard practice on the part of the tax department or government to file and go in appeal to higher courts, because ultimately to them it doesn't cost. It's taxpayers' money.
And how long does this process take? How many years typically?
Well, I think the process could take as long as 10, 12 years, sometimes 15.
Wow.
We have another institution called Authority for Advance Ruling.
Right.
I have appeared a number of times for foreign companies in that forum. And interesting part is that this authority comprises of a retired Supreme Court judge, and alongside you have 2 other members, and it functions exactly like a court. It's adversarial, but it functions like a court, and any foreign company, any non-resident, can seek an advance ruling relating to their tax position on a transaction that you already undertaken, investment, transfer of technology or whatever, or a proposed transaction. So you can go for both. And once a ruling is delivered, then it is binding both on the taxpayer as well as on the tax department. So to that extent, there is some degree of finality. There is no right of appeal under the Income Tax Act from advance.
So that's the risk, I guess.
There is a risk. The good thing is that even though there is no right of appeal under the Advance Ruling Authority provisions, under our Indian Constitution, there is a special right, what is called special leave petition. You can file with the Supreme Court. The Supreme Court has a right to hear any matter from any order of any authority in India. And therefore, even though under tax laws there is no right to go in and appeal, a special petition can be filed, and that is being frequently used now.
Okay.
And for example, in the case of Morgan Stanley, we won on most of the points, but on one of the points we did not succeed. You can't have whole cake all the time.
At the Advanced Ruling Authority.
At the Advanced Ruling Authority.
Right.
But the tax department went in appeal to the Supreme Court, or rather filed a special leave petition. And then we filed a cross petition. And then we succeeded on all counts by and large, except a small thing here and there. But, so there is one right of kind of say appeal to the Supreme Court. And, but I think, so the courts really have come to the rescue of foreign investors, I would say.
Okay.
I think.